especially when it's your own stuff. You know, because even doing this professionally, I didn't handle my own because I found my levels of stress becoming heightened exponentially when it was dealing with my own stuff. Even though I knew what they were doing, I'm like, no, no, no. Like, it's just very difficult. And so if you've gone at that on your own and it's been difficult, there's a reason why. So don't feel like you're stupid or incapable. The system is not set up for you to be able to do it. Just like, you know, did anyone here write their own mortgage unless you were a mortgage agent? Probably not, right? You probably had a real estate agent help you find your house. So it's kind of normal that people are needing assistance through this. So as far as loan modification and what it is, for the most part, what it's going to be is a modification to your current mortgage involving a rate reduction and or an extension of terms. Typically, that's what it's going to be. It's usually going to come in the fashion of what is a step-up situation. So like the Making Homes Affordable, so when that came out, they made everything else like it. So even the in-house programs where we used to be able to, on occasions, get fixed 2% or 3% rates, they're all pretty much sticking to the, we're going to start, at least the big institutions, let me say that. So anything like your Bank of America, your Citi, your GMAC, Chase, Wells Fargo, all those larger institutions are going to behave that way. Now, some of the smaller institutions, like your Aquin, your Aurora, they behave a little bit differently. I actually have reported the statistics on exactly how the banks behave and the numbers of modifications that they're doing as related to the Making Homes Affordable, which is available, if you get the Making Homes Affordable 2010 third quarter report, it gives, somewhat of a report card in relationship to the program, even though the banks claim they're doing a lot of modifications outside of that. So a majority of those larger institutions are going to start you at a 2 or 3% interest rate. It's going to stay that way for somewhere between 2 and 5 years. After that, about once a year, it'll go up no more than 1% until it reaches somewhere between 4 and 5%, depending on when it happens, based on the rates and where they're at. So once in a while, they're worse than that. Okay, once in a while, they want you to go higher, so you've got to look for that. And we had one come through the other day at like 6%, and one phone call brought it down to like 3%. So you just have to know that. But someone who receives that as a homeowner, you might think, okay, well, I had 8, so is 6 the best I can get? And they don't want to give that up. You don't know if they're going to reject you if you reject their offer, right? So you're afraid to, and you don't know how that game works. So, as far as the rate reductions and the step-ups go, people have to plan out, can I afford 5% in 6 years? Because I don't care if you can afford 2% today, I really don't. Are you prepared to pay 5% in 6 years from now? Do you know what that difference in payment can be, and have you accounted in your life where it's coming from? Because if it's just crossing fingers, well, $1,000 a month sounds good now. Well, how does that sound when it's $2,000 a month 6 years down the road?